Small cap growth stocks have been leading the market over much of the last 12 months. My partner Aaron Green and I believe that's due to several factors. First of all, the dollar has elevated versus foreign currencies, making it more difficult for multinational companies to sustain their growth rates. Secondly, there has been a focus on domestic companies, and therefore smaller companies which are predominantly focused their businesses in the United States have benefited. The information technology sector has been a strong driver of performance in the strategy this quarter. Several of the stocks have enjoyed very strong earnings leverage, including Fortinet and Aspen. A long-standing holding, Grubhub, in the at-home ordering of meals through restaurants also benefited significantly from some strategic tie-ups that it made with Yum. But there were a few areas that held back performance, specifically the financials and the healthcare sector. In the financials, WisdomTree Financial, which is a marketeer and creator of exchange-traded funds, continued to feel some pressure, not only from fee cutting in the industry, but also in its hedged products. And some of our healthcare stocks also had some what we think are short-term disappointments. We think a lot about valuation of small cap growth stocks, engaging the relative risk reward and repositioning the portfolio accordingly. We're very cognizant of the increase in stock prices, much of which has come from an improvement of earnings and after-tax cash flows rather than multiple expansion. That said, we have close to 20 new investments in the strategy over the last year, as we're constantly looking for aggressive growth companies with relatively attractive valuation. My partner Aaron Green and I look for innovative, disruptive companies to include in the small cap growth strategy. Some of the recent areas where we've made investments include the alternative energy space, where a recent initial public offering, Bloom Energy, brings low emissions, high output, high reliability fuel cells to their business customers. We've also found innovation in financial services. We recently purchased a significant position in a company called Trupanion, which provides pet insurance. Pets, of course, are doted on by their owners here, by millennials especially, and pet insurance is very, very modestly subscribed to here in the United States compared to European economies. In our view, valuation of small cap growth stocks is not overextended, although many strategists and pundits, especially on the sell side of our business, have called rotation back into value stocks. You have to keep in mind that earnings growth and strong after-tax flow growth has been the predominant influence on small cap growth stocks. We've gone back and looked at the relative valuation in the smaller sector of growth stocks versus value stocks, and by many measures of price to cash flow and a number of other measures that we look at, growth stocks are no more richly valued relative to value stocks than they have been any time in the last 10 years.